Welcome. In this video is ZBCN coin getting ready to attack. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we closely examine the chart, it becomes clear that a well-defined descending trend structure had suppressed the price for an extended period. This trend line represents a phase during which every attempt to rise was rejected, and the price consistently formed lower highs, maintaining a downward trajectory. This structure had evolved into a strong resistance zone, particularly as investor confidence weakened and selling pressure intensified. However, recent price action indicates that this steep downtrend has now been broken, with the price managing to move beyond the confines of this structure. This development is considered a significant breakout in technical analysis, as moving outside of a long-standing trend line typically signals that buying pressure is increasing and selling pressure is beginning to wane. That said, the behavior of the price following such a breakout is equally important. Currently, the price is positioned above the broken descending trend line, but a classic retest has yet to occur. A retest refers to the price pulling back to test the former resistance trend line, now a potential support level. Successfully completing this test adds technical credibility and encourages investors to accept the level as a new support. Therefore, a potential pullback following the breakout, if it holds at the former resistance line, can lay the foundation for a more sustainable upward movement. Additionally, it's important to note that price does not always move directly upward after a breakout. In many cases, market participants seek to gather liquidity and establish reliability through pullbacks before confirming a new direction. As such, it is quite common for the price to return to this region and consolidate for a period. If this retest is accompanied by strong buying volume, it may signal that the price is forming a solid base and could be preparing for more aggressive upward moves in the coming days. In conclusion, the breakout above the descending trend line suggests a significant structural shift, but for the breakout to be considered technically sound, the price must retest this level and confirm it as support. Therefore, in the coming days, price action around this area should be closely monitored. If the breakout is reinforced by a successful retest, it may trigger a period of positive momentum in the market, but we can't base analysis solely on trend lines, so let's look at the other metrics as well. Stay tuned. When analyzing the chart in depth through the lens of Elliott wave theory, it appears that the price is either in the process of completing the first wave or has just recently completed it. In this context, the start of a corrective move, namely the second wave, which is a natural part of market structure, is highly likely. According to Elliott theory, every 5-wave movement is typically followed by a 3-wave correction. However, the key point here is how far this second wave might extend, as the retracement could signal the beginning of a new upward trend, the third wave. In such scenarios, one of the most frequently used tools by technical analysts is the Fibonacci retracement levels. By drawing a Fibonacci retracement from the beginning to the top of the first wave, valuable clues can be obtained about how deep the second wave might pull back. The 0,618 and 0,786 levels in particular are considered important psychological and structural support zones in the world of technical analysis. These are often the areas where buyers re-enter the market and act as zones for price consolidation and accumulation. The first wave is often filled with uncertainty for investors. However, once it is completed, a significant portion of market participants begin to recognize the formation of a new trend. As a result, the potential declines during the second wave are often seen not with fear, but as buying opportunities. It is common for the price to retrace to the 0,618 or even the deeper 0,786 level during such a correction, after which the price often regains momentum and resumes its upward movement. If the price reaches these mentioned levels and encounters strong buying interest, the third wave could begin, leading the market into a strong bullish phase. In Elliott theory, the third wave is typically the most powerful and longest-lasting wave. Therefore, accurately identifying the end of the second wave is critical for investors to position themselves accordingly. It is also essential to consider investor psychology during this phase. Many traders may find such corrections intimidating, but these movements are often opportunities that precede major uptrends and should not be overlooked. The 0,618 and 0,786 Fibonacci levels are not only technically significant, but also represent areas where buying activity tends to concentrate from a psychological perspective. In conclusion, it is highly likely that the price has entered the second Elliott wave after completing the first. This correction phase not only sets the stage for market stabilization, but also helps build the momentum needed for the third wave. In this context, The 0,618 and 0,786 levels stand out as critical support zones. If the price finds support in these areas, a much stronger and more stable upward trend could begin in both the short and medium term. Therefore, price behavior and indicators around these levels should be closely monitored, and strategic position planning should be based accordingly. When we take a closer look at the chart, a notable development can be observed in the vortex indicator. Specifically, the blue line, representing positive directional movement, continues to remain above the red line, which represents negative directional movement. This is a highly critical signal, as it indicates that buyer pressure in the market is stronger than that of sellers. The vortex indicator is a valuable technical tool used to measure the strength and continuation of a trend, and its current configuration confirms the presence of a bullish bias. The ongoing upward trajectory of the blue line on the vortex indicator not only supports the current trend in price, but also signals that upward momentum is gradually strengthening. This indicator is designed to help identify the direction of the trend and detect early signals of potential reversals. The steeper the rise in the blue line and the wider the gap from the red line, the stronger the evidence that buyers are taking control of the market. In this scenario, increasing buying pressure is expected to continue, suggesting a sustained upward movement in price. In this context, the recent positive divergence in the vortex indicator supports the notion that price may target higher levels from a technical standpoint. If the blue line continues to rise with a steeper slope, this not only confirms the upward movement in price, but also reinforces confidence among medium and long-term investors. Such clear bullish signals are often accompanied by increasing trading volume, which helps ensure that the uptrend is healthy, strong, and sustainable. A well-aligned relationship between technical indicators and volume is often a hallmark of a solid market structure. Furthermore, a historical analysis of the vortex indicator shows that previous instances where the blue line clearly diverged from the red line were often followed by significant upward price movements. This historical context suggests that the current setup may be similarly reliable. The key factor that draws investor attention here is not just the blue line being above the red, but whether the upward movement will continue. If the blue line keeps climbing and the red line declines further, this would indicate that market momentum has decisively shifted in favor of the bulls. The movement seen in the vortex indicator often delivers stronger signals when aligned with specific chart patterns. For example, if the price is consolidating near the top of an ascending triangle and the vortex indicator simultaneously shows positive divergence, a breakout from the pattern could lead to a significant upward move. In other words, while the indicator alone provides valuable insight, its signals are even more effective when evaluated alongside price structures. The current setup seems to reflect exactly such a scenario. Technically, price is consolidating at a resistance level while the vortex indicator is trending upward. This combination of signals could be a precursor to a potential breakout. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.